everyone, my name is Dr. Melissa Cohen. So, if you were so happy to receive money from the government because you had kids in the last part of 2021, that was great. But unfortunately, that may have a negative impact when you go to file your taxes by April 17th this year of 2022. The tax day was made, I think the 15th is on a Friday. I don't know. I'll have to go look. But the tax day is not April 15th. It's a couple days after this year. But what happened was part of that American Rescue Plan that was signed by President Joe Biden in March, it basically did a couple things. So the first thing is your 2021 child tax credit went from $2,000 per child age 17 and under to $3,000. So whenever you do your taxes, in previous years, it's been $2,000 per child. Now it got bumped to $3,000 per child, with an extra $600 for children under age 6, it says. So then the second part of that is, instead of waiting until you file your taxes in April to get a refund or get that counted towards your total tax bill minus what you put in, hopefully you get a refund. What the government then decided to do is to put money in the hands of the consumers then, at the end of 2021, every month. So families, millions of families, received half up front, from either $250 to $600 to $300 monthly payments from July through December. So what that means is your family, depending on how much income and how many children you have, when you go to file your taxes from the previous year, you're given a certain amount of money for the child tax credit. But as I said, President Biden wanted to stimulate the economy, get the money back to the people now that you needed it now for just daily expenses, right? Just living. If you've got kids, they're expensive to begin with. But what that also means is you got half of that money up front now. So that half of the money you already got, when you go to file your taxes, you've already gotten half of that. So when you need to be prepared for a tax bill. So depending on how much, like I said, we can go through some of these details here, and you can just be aware of it. You're going to have to talk to your accountant or whoever, a CPA or whoever does your taxes every year, or just get on, your online softwares and start filling in the numbers now, so that if you do have to end up paying something, you can make preparations for that. So if you received $300 for July, August, September, October, November, December, that's 6 months, that's $1,800. And let's say you only get usually $1,000 back, you may end up paying money. So, and if you're a working family, that's going to be a hard pill to swallow here in April. So there's a couple articles out here, and I'll put the link to the CNBC article here that I'm referencing and such, so that you can go through and read it yourself if you need to, or if you want to find actual numbers and things as well. So basically, just to give an example, it says if you qualify for a $3,000 tax credit, you receive payments of $1,500 in advance. So you are only going to be able to claim $1,500 balance when you're filing a tax return. So whereas last year you were able to claim $2,000 tax credit, so that $500 less, that may impact you. So it may be, if you've got a small loan or a small refund in previous years, you may owe money. The other thing is, if you are previous years got a larger refund, it's going to be a little less this year. Now, also, just give you some other things you need to consider when you're filing your taxes is you also have to remember, if you had any student loan payments through the Department of Education and you had your interest, you could write those off on your taxes as well. So here's part number 2 of this video. And so if you didn't pay any taxes or pay any loans, interest on those loans because they were in forbearance for a year or since March 2020, at least with March 2020, you had 2 or 3 months of interest that you could put on your taxes. Well, that went all of last year. So for 2021, you probably, if your loan was in forbearance, you didn't make any student loan payments and therefore no student loan interest payments, which then you cannot put on your taxes this year. Now I had some that were in forbearance and then some that were I still had to continue to pay. So I do have a little bit that of student loan interest that I can put on my taxes as well. And then just as a recap here, it says you can deduct up to $2,500 of interest during, depending on how much you actually paid and things like that. But that's a big, depending on your income as well. It says the $2,500 benefit starts to phase out when your modified adjusted gross income, your MAGI, is over $70,000 for single filers and $140,000 for joint returns. So that may make an impact on your tax refund this year as well. All right, so I hope those two things give you a better idea if you're planning. So if you have any questions, feel free to reach out to me at smartandsassymoney.com.